Hello everyone. In today's video lecture, we will be going over our topic for class 11, which is partnerships. This is one form of business entity. We will be looking over a total of 4 different types of business entities, including sole proprietorships, limited liability companies, partnerships, and corporations. So the following class, we will go over simply partnerships, and we'll touch a little bit on sole proprietorships as well as joint ventures, which are naturally just a subset of all of the other 4 main groups of business organizations. All right, just getting right into it. So as you can see, we'll first touch upon what is the definition of a sole proprietorship. We'll then look generally at what a partnership is and what the differences a partnership has compared to a corporation. Then we'll look into 3 types of partnerships, which would be the general partnership, the limited liability partnership, and the limited partnership. Then we'll go briefly into joint ventures, as I mentioned before. So just try not to get confused between a limited liability partnership, or LLP, with a limited liability company, which is an LLC, and likewise don't confuse either of those with a limited partnership, which is simply an LP. So just keep in mind with these acronyms, there are LLPs, LLCs, and LPs, and we'll go into each of these so that you'll have a better understanding. So the first type of business organization is the most basic and simple type, which is called a sole proprietorship. So a sole proprietorship is usually only referred to by the law as an individual who's engaged in any business who has these 4 characteristics. These would be: the individual is unlimited in terms of personal liability. 2, is taxed directly on his or her profits. 3, makes all operating decisions. And 4, provides all capital. So this type of business entity doesn't require anything other than these 4 characteristics and generally only involves one individual. There is no formality that's associated with a sole proprietorship, and at the time that the sole proprietor or individual dies or chooses to dissolve this type of business structure, then it happens immediately. This is the simplest and requires no registration. Any individual over the age of 18 can actually get a checking account, go and start their own business in terms of starting a YouTube channel, buying flowers to sell flowers, maybe buying real estate. All of these situations where it only involves one individual putting in their own money and that person makes all of the decisions, they would be in a sole proprietorship. So my name is Kevin Chu. If I chose to go outside and sell flowers, I could actually do so. I would just simply have to file my own taxes on the money that I make from selling the flowers. But other than that, I don't really need to do anything other than have a banking account under my name. This would be the most basic business structure. Next, let's look at partnerships. So there's 2 big groups of business entities. One is a partnership and the other is a corporation. So both of these groups have their own distinctions and various different definitional differences within each of these. For this unit, we'll only be covering partnerships. And by looking at a partnership, what is it defined as? It's defined as an association of 2 or more persons carrying on a business as co-owners for profit. So very important to keep in mind here is a partnership is defined by 2 or more persons. So the law here specifically designates that a partnership must include people. This is important because a corporation or a limited partnership could actually have a business entity, perhaps another partnership or another corporation that then associates with another person or another corporation or partnership, and they would then become a limited partnership, or a limited liability company. So let's put a pin on that for now, but just keep in mind that a partnership is only human beings, and there must be two or more. And when these two people or more come together to pool their resources, perhaps to make a profit, then these there are three different types that of partnerships that these people could be in. And these would be the general partnership, the limited partnership, and the limited liability company. Sometimes the limited liability company is structured as a limited liability partnership, and we'll go into that in more detail. Just remember, though, that a corporation doesn't fall underneath the definitions of a partnership, and they differ because they essentially create a separate legal entity that may exist in perpetuity, unlike what we just went over, being a sole proprietorship or a general partnership, in which the rights and obligations of a corporation are separate from the rights and obligations of the owners or managers. This is a very large distinction. Partnership is for human beings, and their creation of this partnership is tied to each of their individual legal rights and obligations in a very tight manner, compared to a corporation in which there is a separate legal entity that these people or entities create. So how do you form a general partnership? So there's an act, a statutory act called the Revised Uniform Partnership Act, and the RUPA. The RUPA defines a partnership as an association of two or more persons to carry on as co-owners a business for profit. So a business in this case, and as defined by the RUPA, is simply any trade, occupation, or profession. And a partnership would be a legal entity that's distinct from its owners. So an advantage of a general partnership is that it can exist without any formalities. There's no filings required, and much like a sole proprietorship's creation, it can be created without an explicit agreement, either oral or written, or even an intent to form a partnership. The law simply looks at the facts and sees, is there two or more people? Are they carrying themselves out in a business? And is that business operated for profit? Those are the only three elements that the RUPA is concerned about. And therefore, the intent to form a partnership is not required, but the intent by the co-owners to make a profit is required. And that requirement does not matter if it always factors in, regardless of if a profit is actually earned. So here's an example. Jim is doing business as Harvin Shoes, a sole proprietorship. In the past year, Jim has regularly joined with Stuart in the marketing of sport accessories. Jim and Stuart have formed a partnership if they intend to make a profit. So here, Jim, he is an individual, he's a person. Stuart also is an individual or person. And Jim operates Harvin Shoes, a sole proprietorship. If Jim and Stuart come together to form not necessarily a business, but engaged as co-owners of a type of legally distinct business that's trying to make a profit, then Jim and Stuart have indeed created a general partnership. So once a general partnership is formed, what is the operation of that general partnership? How are the profits distributed, the losses allocated, and when are they distributed and allocated? So the RUPA provides that profits must share their profits equally and losses in the same proportion as their profits. The partners may agree otherwise. And what's important to remember here too is that when it comes to filing taxes or it comes to fulfilling a debt obligation that a partnership may have incurred, each partner has unlimited personal liability. So if the business goes into debt and owes something, then the people that money is owed to, they can actually go and sue the partners of the business in order to get their money back. Furthermore, so this sort of weakness in a general partnership will be addressed later on in the formation of a different type of partnership. So in a general partnership, however, a partner who is in the partnership has the right to distribution, which in other words is a transfer of partnership property from the partnership to a partner for profits, payment of services, or reimbursements. So, unless otherwise agreed, the right to compensation for services is generally a right to receive a share of the profits, not in payment for services. So here you see is that if there are two or more partners in a general partnership that was validly formed, the partners may be liable for debts and losses incurred by the business, but each of the partners has a right to distribution of the profits in an equal manner, divided equally between the other partners. And also distribution and in terms of like losses suffered by the business, then the partners also share in those losses equally as well. And even though it is a disadvantage that there is unlimited personal liability, there's also an advantage in that you don't actually have to pay taxes in a partnership. You simply have to report the earnings and losses of a general or limited partnership, because in this way, profit or loss is passed through to the partners. It's a pass-through entity. It is not a separate taxable entity. So what are the rights of the partners? Well, the rights, powers, duties, and liabilities of partners are largely defined by the law of agency. And as you recall in the previous class, we went over how an agency relationship is formed. What are the duties and rights of an agent compared to the duties and rights of a principal? So partners are essentially all principals and agents of their own partnership. So each partner has a right to the equal participation in management of the partnership. So ordinary matters are resolved through majority rule, or a vote by the majority, which is over 50%. However, in order to make a very big decision about the partnership, a unanimous vote is required. And big decisions pertain to either amending the partnership agreement, admitting a new partner, or other non-routine matters. All of these require a unanimous vote in order for that decision to pass. So also, a partner has a right of access to partnership information, which is the right to inspect and copy partnership books and records. Likewise, they have the right to use or possess partnership property if they're exercising it on behalf of the partnership. And lastly, the partners have a right to choose associates, meaning that in order to add an additional partner, we must require unanimous consent from all current partners. So hopefully by looking at this, you have more of an understanding of a general partnership, and I'll see you in part 2.